In this video, we're going to talk about getting on the right side of the percentage and understanding percentages better. Many people simply don't know that small percentages are the key to absolute abundance, but there's more to it. There can be immense returns for small percentages in the market, especially when they're turned over frequently, but you need armor. The armor of positive excellence, and we'll explain why in this particular video, as well as showing you some deep secrets that are known by professional traders but unknown to 95% of market participants. Stay tuned, it's going to be a really good video. Over the past 24 hours, total crypto market cap has come up 0.47%. The greatest gainer in the top 9 cryptos is Dogecoin. The greatest gainers, top 100, past 24 hours, Maker, Quant, Uni, Doge, Fracshare, Conflux, Zilliqa, SHIB, and HBAR. The greatest losers, top 100, past 24 hours, Ton, XTC, Arweave, Tron, XLM, Stellar, Injective, Woo, Casper, and Zcash. Who let the dogs out? Doge and SHIB are going for it. Doge and SHIB tend to follow each other. It's good to keep your eyes on these as a pair. Another crypto showing some positive momentum at the moment is Litecoin. Litecoin is just here. We know that no alt can escape Bitcoin's gravity, Rule 45. So when we look at Bitcoin's gravitational pull, what do we see? A specific pattern that's playing out directionally on all the alts. Take note of this. This is really important. When you go to look at your particular alt, if you're not looking at Bitcoin's gravitational pull, you're missing some really important information. The term gravity is really important. If you look at Doge, when Bitcoin was coming down, Doge was not coming down as hard and as fast. This means it had investor attention. What does it mean when you get an inverter? For example, Bitcoin is going up as Tron is coming down. This is lacking investor attention. Investor attention is what we track inside the masterclass. Yesterday, ADA took out Doge, but now Doge is taking out ADA. Gravitational pull is one thing, relativity is another, and what we're doing with relativity analysis, we're just looking at the percent gain over the same period of time of the alt compared to Bitcoin, and we can see Ethereum is stronger in terms of percentage gains. XRP is around approximately the same, BNB just a little bit stronger. Doge really recovered quite well. It's put in a bit of a sharp spike. What is this caused by? It's caused by short liquidations. We can see that ADA is outperforming Bitcoin's gravity at the current time. Solana just about bang on, just a little bit stronger of course, but just very much approximate. Tron was outperforming and now it's starting to invert. This is where you use relativity and gravity together. If you're liking the content so far, please smash that like button and don't forget to subscribe and ring that notification icon so you don't miss a thing. And if you're new to the community, a very warm welcome, and you might just like to say hi in the comments so we can welcome you. Turning to 24-hour liquidations, we can see there's been about 17.54 million in liquidations. The majority, around 13 million, have been short. This has pushed the crypto market up. In the past hour, we've seen more longs get liquidated inside Doge than shorts. There's a lot of interest in Doge at the moment. When Elon Musk rebranded Twitter to X, what did he do on his profile? He said, I'm going to put the Dogecoin logo next to X. That just made Doge go parabolic. The other thing to note, Litecoin is getting some positive attention today with the Litecoin halving about 4 days away, no surprise. Looking at the cryptos through the EDX exchange, what they are is Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. You can see the bit of an uptick here in Litecoin as it approaches its halving. They say life is what happens to you when you're anticipating something else. If you're going through a life pullback at the moment, please know the sun will come out again, and our love and healing thoughts are with you as a global family of more than 16,000 people. You're just gathering strength for your next life rally. When you get a pullback, it's often a good idea to just sit down and think, how can I do my life more intelligently? How can I do it better? In the film The Matrix, the machines plugged us in to a universal shared consciousness. And the first Matrix was a nirvana. Everybody was happy. But that's not what our world is about. We're about gathering strength. We want a positive slope on this strength curve. What is our purpose as people here? It's to spread kindness, empathy, and care. A lot of people think, oh, Ken, you must be nuts. Have you seen how unkind people are to me? I want to spread revenge and hatred instead. When people get negative, they're not spreading revenge and hatred, they're spreading blame. Blame for things that didn't go right in their life. Blame for being treated unfairly. We are all treated unfairly. Basing your life around these negative emotions won't make you happy. A lot of people say, I'll be happy when people respect me. The key is to respect yourself first. Don't worry about what other people think at all. That's why, with Positive Excellence, we focus on inner peace and outer peace. People are always coming for you. They're always trying to upset the apple cart, so to speak. People have a go at you. People will criticize you. In fact, it's said, out of every 3 people that you meet, 1 person will like you, 1 person will say, meh, I don't care at all, and 1 person will dislike you. So therefore, focus on the 1/3 that likes you. And the other 2/3, forget about them. It's really easy in life to focus on the whole, not the donut. Life is always in our hands. It really depends on what we focus on. We can focus on what's going right in our lives, or we can focus on what's going wrong. The brain is naturally attracted to survival, so it focuses on what we don't have, and it ignores or just says what we do have, that's just normal. That's why focusing on gratitude is very powerful. There's a lot of things to acknowledge as good in your life. Without doubt, gratitude is the best attitude. And why am I talking about this? This is a trading channel. What's a trading channel talking about gratitude and positive excellence for? Because the markets are ruthless. The markets are always out to desynchronize you. They're always out to give you a life pullback if you let them. You need to become bulletproof. You literally need to protect yourself from the market, and the way that you do that is to put on your bulletproof vest, which is positive excellence. This will bulletproof you from the slings, arrows, gunshots from life as well. Financial markets literally require psychological armor. That's why I talk about positive excellence. It is your psychological armor. It's strong, and it's impenetrable by the market. In the comments, please let me know your thoughts about positive excellence. We're not seeing the same thing in Bitcoin Cash. We'll look at the levels in Litecoin as well as Doge just coming up. But first, the Coinbase rockets, and we can see Voyager token is going for it. In fact, when you break Voyager's price action down, it's been very, very turbulent of late. We're starting to see some good patterns with especially Sand, Axie, and NIA. We're seeing some green in the crypto market. Why is that? Because Total is coming up to challenge again that $1.153 trillion mark. It's happening. It's trying to get up there. Will it make it? Won't it make it? Please let me know your thoughts in the comments. Something that can give you a bit of assistance on that question. When you draw a resistance line between these 2 peaks, we can see that total crypto market capitalization is trying to get above that resistance. When we look at support lines below, we can also see it's above support. So it's above 2 levels of support. Does that mean it's going to hold it and re-challenge this? Quite possibly. You must be prepared for all 3 scenarios. things to go in your direction, to go against you, and to get flat right boring. Yesterday was an incredibly flat day. If total gets above that smart money sell area, it's party on for the alts. It's also party on for Bitcoin. But what is Bitcoin doing at the moment? We can first look at recent indicative price, and this is to understand where retail is looking. Putting some retail trend lines in, we can see that resistance that we saw in total is a little bit different. Total crypto market cap came over that resistance and came back to retest it. We can see Bitcoin is under that particular resistance on a relative basis. And when we look, Bitcoin is also above support. So that's quite good. But we don't use recent indicative price. We use objective dynamic market structure called CTKS structure. What does that look like? Are we at smart money support? Are we just below smart money resistance? That's the question we really have to answer. How do we find this out? We throw on the smart money indicator, and if you're interested in this indicator, just go to ctksmethod.org. It's very easy to see on the screen, but it's a little bit hard maybe to see on a mobile. So I'm going to wrap specific levels around this. These levels are called, or these bands are called SCs or Stanfield zones. We can see there's a smart money buy area below Bitcoin's price of 29,367. There's quite a bit of below buying support, which is good. There's a lot of fresh air up to the next resistance level. This means that there's the potential for total to actually break through. It could be a very interesting day today. Support and resistance are two very, very important things to understand. When you're at resistance, there's a lot of sellers there. Sellers push down the price. When you're at support, a lot of buyers are there. They push up the price. Therefore, it's critically important to know, are you in an area of support or resistance? If you were looking at recent indicative price or RIP, it's a great way to RIP your money. You would just say, oh, look at this, Litecoin has gotten over these two areas. It's going to go on a parabolic run. Of course, Litecoin is coming into its halving, but we still have to understand market structure. Specifically, objective dynamic market structure. Let's turn on the Litecoin Smart Money Indicator. What are we seeing? Litecoin has definitely broken through one area of resistance, but what you may not be able to see is the multiple lines of resistance above that. I'll just throw an SC around that. What we can see is Litecoin seeking to make its way through all of this resistance. That's a really good sign. Go Litecoin. But the case is, this is still the sellers hanging out on all of these different levels. That means Litecoin could get a bit of negative momentum and get a bit of a pullback. That's what we're anticipating. But always do your three-dimensional risk management. What if Litecoin just explodes parabolically from here? It can happen. This is crypto. Are you prepared for that? Are you prepared if Litecoin just decays from here? Of course, assuming that you've got a position in Litecoin. And what about if Litecoin just went up through these levels and just came back and just consolidated for the next couple of days? Are you prepared for that as well? Rule 239 is very important here. CTKS structure overrides. CTKS structure is objective dynamic market structure. When we looked at Litecoin, those particular levels of smart money sell resistance, they are structure. We have to be very, very aware of structure. We saw with Litecoin, when it just exploded, it hit so much structure, so much very heavy overhead structure, and it decayed. We saw it with Bitcoin Cash. It also did the same thing. I'm talking quite a few weeks ago, but it's very important to understand the role of structure. Always look at CTKS structure first. It's a very, very powerful way to know where a particular crypto is going. When it comes to percentages, I gave the concept in one day, For example, you get 1% 3 times a day. If it was $1,000 and you got 1%, that would be $10 per transaction. 3 of them would make $30 per day. So that's the daily return. What about 2% every 3 days? 2% would be $20 on $1,000. You would be getting this $20 every 3 days. So that would be that. 5% over 5 days would be $50 on $1,000. And when we look at 5 days, it would be that value. What about 10% in 14 days? 10% of 1,000 is 100. And in 14 days, it's this figure. What becomes really interesting is working out the return on investment. This is a very simple calculation. I'm only assuming you don't reinvest anything. You just get 1% on 1,000 or 2% on 1,000, not reinvesting a cent, just using the same capital, rolling it over again and again and again. Meditative Mind and others pointed out what happens when you accumulate your capital. But there's some things to note. Hypernova asked, what do you do in terms of layering? And I'll get back to that in a moment. The concept is, if we just reduce these to a daily basis, for example, $30 per day, that's a day, but 3 days 2% is $20, just divided by 3 to get to the daily basis. Over 5 days, you get $50, just this one here, divided by 5 to get to the daily basis. 14 days, 10%, 100. How do you get to the daily? Just divide it by 14. It's pretty interesting, isn't it? Very, very straightforward. What you're actually looking at here is 1% per day, 3 times per day is 3%. And then 2% each 3 days is 0.67%. 5% every 5 days is 1%. And 10% every 14 days is 0.71%. You can see just out of the gate that 1% 3 times a day, each day, is very, very good. It just eclipses the others. Let's translate that forward. In 1 year, if you did 1% 3 times per day, and I'm not saying you can do 1% 3 times per day, that's not the purpose of this example. It's the example that illustrates if you get a very small percentage over the span of, say, 90 days, you're getting a 90% return without reinvesting. For example, if you got $1,000 and then you got $10 return, you're not putting in $1,010 for the next trade. You're just popping back the same 1,000. And what about 365 days just by doing that 1%? It's a huge, huge return. This is what I refer to when you understand percentages. This is what you're understanding. But there's a lot more to this. Rule 239 is very important here. CTKS structure overrides. CTKS structure is objective dynamic market structure. When we looked at Litecoin, those particular levels of smart money sell resistance, they are structure. We have to be very, very aware of structure. We saw with Litecoin, when it just exploded, it hit so much structure, so much very heavy overhead structure, and it decayed. We saw it with Bitcoin Cash. It also did the same thing. I'm talking quite a few weeks ago, but it's very important to understand the role of structure. Always look at CTKS structure first. It's a very, very powerful way to know where a particular crypto is going. So you can see, next time somebody says, oh, I just made 200%, you can say, well, I made a lot more, just turning over 1.5%. I have another really interesting question for you today. What would be the return if you could get 0.5% 8 times per day? Again, this is a thought exercise. It's very important to think about percentages. Please let me know, and if you're really good, you'll be able to fill in all of those details as well. Now you might ask, what's the question? When we did 1% 3 times per day, that was $10 by 3. Now we're doing 0.5% 8 times per day, and we're trying to figure out what the return on investment would be. what the daily, 3-day, 5-day, 7-day, 14-day, 30-day, 365-day, and 15-day profit would be, and what would the return on investment be across those periods. This is a really, really good skill for you to pick up. When looking at Solana, Solana is currently sitting on an area of smart money buy support. That's pretty cool. Well done, Solana. The next level above is around that 25.92 mark. As a professional, you're interested in retracements. You want the retracements. You can see inside Solana, there's so many capabilities to make 1%, at least 0.5%, a half of 1%, easily. Unfortunately, there's a lot of misconceptions out there on trading. All the professionals know trading is definitely the way to go. There's nothing wrong with investing, but if you're in a position where you can learn how to trade, you can see the results for yourself. And you don't have to go after 10x's or 20x's. You can get that by just rolling your money over. Please pop in the comments, what do you think the returns are on 0.5%, 8 times per day? Now, 8 times per day could be a lot, but we can play around with the number of times tomorrow. I'll do it in the spreadsheet for you. Let's have a look at the CTKS structure on Doge. By turning on the indicator will give you the lines. I've just put SCs around these particular lines, so it's easier for you to see. And you can see down here, there are so many smart money buy levels because this area is below the current price. Doge currently is 808. What did we see happen here? Doge crunched through a smart money sell area. When the price was below, it crunched through this. A lot of shorts were sitting there saying, okay, well, what I'm going to do is I'm going to put my stop there. And that's exactly what they did. This is a short liquidation that pushes the price up. Where did it push it up to? A resistance at 811. What happened then? They covered, and of course the price came down. You'll see this a lot. We call it sharp angles. They do something. Please let me know in the comments. But this is the reason why. When you see a sharp spike up like this into an area of structural resistance, this is not recent indicative price. This is Doge marked up since 2013. When you see that, what you're actually seeing is a structure inside Doge. Recent indicative price is perhaps the greatest curse of the technical analysis industry. Please let me know in the comments, are you trading Doge at the moment? Hypernova had a question. On what levels do you place your money, and do you go 100% in at each level? For example, if you had $1,000, do you just place the $1,000 on one level? The thing to remember, go slow to go fast. Inside the masterclass, we've got a very scientific way of placing trades. We would never ever consider doing something like that. Just putting a whole lot of money, your whole account on one level. That is very, very dangerous. This is also another example of CTKS structure overrides. A lot of people would be saying when Doge just exploded like this, oh, I need to get in, I need to get in. And then if they went all in and they saw the price go down like this, they would say, oh no, I made such a mistake. And they would sell there. They would typically buy around the top and sell around the bottom of the retracement. We do the exact opposite. We love retracements. We have so many rules that protect us, and one is let price come to you. Another one, Borsog, buy on red, sell on green. Actually, professionals are selling into this rally and buying the retracement. They're borsogging, they're buying on red and selling on green. And especially if you manage to buy it around a very steep area, strong area of structure, that is undoubtedly the way to go. The more structure you have, the more safety and security you have as well. We live in a time and society when everybody wants everything immediately. Financial markets are not like that. They're not like a slot machine. You can't just press a button and it will return whatever you want. You can't hit the jackpot every time. And in fact, when you look at real professional trading, real professional traders don't view what they do as gambling. They have a system, they know what they're doing, they understand percentages, and they know when they're synchronized they can make profits, and when they're desynchronized they'll make losses, and they have to learn new rules from the losses. That's why they're called lessons. One of the best ways to get synchronized is to understand the price can go in a different direction to the one that you think it will go, and just get yourself prepared for that, both psychologically and tactically. That's what the CTKS code is all about. What is the percentage probability of a trade or an investment? And you can do either, because trading is investing and investing is trading. It's just you buy and you sell, just at separate times. That's it. That's as hard as it gets. A lot of people worry about tax. They say, Ken, I don't want to be a trader because I don't want to pay tax. You're looking at the wrong thing. When you're looking at paying tax, actually, I might do an episode on this. Please let me know if you would like me to just cover off why you shouldn't care about tax when it comes to trading and investing. If you like that topic enough, I'll do it. The concept with the CTKS code, you think about when you layer into something or you just buy something, you say, okay, I'm buying at spot, anticipating that the price will go up. You think about the price going down or going against you first. That doesn't paralyze you, it prepares you, because you want to get the percentages on your side. This three-dimensional risk management is very, very powerful. It's what all professionals do. Unfortunately, retail doesn't even think that the trade can go against them. That's why they ride the retail roller coaster of emotions. They just can't believe that the position would go in some other direction than the one that they want. And when it does, it's very easy for them to blame. You don't want to blame. Blaming means you've learned nothing from that particular lesson. And what does that mean? You're going to get greater losses going forward. You don't want that. You keep losses small, not through stop losses, but through learning. Learning is the most important thing that you'll ever do. You must have strong foundations. You need to know intercorrelation and interconnection. You need to look beyond the charts and know how charts all intercorrelate together. That's the fastest way to get synchronized. Then you need to be able to find the market's focus. Before you buy or sell, having mastery of emotional control is critically important. There's so many ways to buy and sell. You can do tight trading, cycle trading. You can do so many different types of trading. But the key is to be in control of your emotions to start with. A very big thank you to Let Me Know Barry, who is currently offering a CTKS Partial Masterclass Scholarship. You can apply in the links in the description of this video. Perperatum has also very kindly offered a CTKS Partial Masterclass Scholarship. There are many sections within the masterclass: the foundation, the trend, the timing, the trigger, and the real wealth section. It's 30 plus years of knowledge transfer and some big inventions. Your knowledge will be built from the ground up, just like a house. And many thanks to Frederick for this very kind comment. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.